Hi, this is Parameter from Surety CFO. We are a construction accounting firm based out of Long Island, New York. We work with contractors who work on public work, government, or commercial projects, need bonding, or want to increase their bond capacity. As you know, if you're working with surety agents, you need your books to be done in a certain way. So, in this presentation, I'm going to explore what these underwriters really look for in your books, how to get your bonds approved, and how to increase your bond capacity. So, let's get started. So, when you approach the surety agents, they ask you for books done in accrual method. If you are new to this construction arena over here, you know that most of the times you go for cash basis bookkeeping, which is what your tax preparer or CPA ask you to do for tax preparation purposes. But as you are growing, you need your books to be done in accrual method for surety bonding purposes. I will explore further in details all the points I have highlighted over here, but the few things which are most important is job costing. They ask you for a WIP schedule and WIP adjustments to be done on the books. The key ratios, which has a lot of importance in the eyes of the underwriter, because based on these ratios, they increase your bond capacity. And ultimately, building a construction business with correct margins is most important. Otherwise, you will be seeing that you are funding the projects out of your pocket. Then hiring a construction bookkeeper and CPA is most important because you will be asked to be provided with interim financials, reviewed financials, or compiled financials. If you are working with a regular CPA who's not really proficient with construction accounting, they would not be able to generate these for you. So, working with a construction CPA and a bookkeeper is very, very important. What is accrual basis bookkeeping? So, accrual basis bookkeeping is entering your estimates or creating them in QuickBooks, creating your invoices in QuickBooks, tracking retainages if you are using AIA billing on your balance sheet or progress billing in your QuickBooks. So, you're basically doing the billing or record keeping of the billing inside QuickBooks. So, your balance sheet shows what is an accurate accounts receivable. It shows what's owed to you by your customers, which is what you need to see or the surety agents need to see when they're asking you for interim financials. Also, with regards to accounts payables, you need to enter all your bills which you pay to your for your material purchases, subcontractors inside QuickBooks and pay them out of QuickBooks. So your books reflect accounts payable in an accurate amount at any given point of time. Payroll is always or most of the times outsourced to ADP paychecks. In those cases, payroll needs to be reconciled inside QuickBooks so that we show proper liability on the books on balance sheet, and liabilities which are notes payables, credit card dues, equipment loans, fixed assets such as vehicles loans should be properly represented with the ending month end balance represented on your financials. So, balance sheet, having an accurate balance sheet is the key to get bonded or increase your bond capacity, because showing negative balances as a liability is something which we see very often when you go for loans, especially if you're a small contractor. Your balance sheet is not right most of the times because it shows AR, which is accounts receivable negative, negative loan. So those are the huge mistakes which are kind of red flag and needs to be rectified before you go for bonding purposes. It needs to be right and on point. Job costing, again, allocating material cost, labor burden, subcontractors to the jobs is very important because you need to track things on WIP schedule. I will show what a WIP schedule looks like, but to do that, we need to have job costing in place. Payroll is a huge cost for construction industry. And if you are using third party payroll, as I said, ADP, Paychecks, or any other like companies, you need to capture the cost of labor and labor burden inside QuickBooks so that you're not just dumping everything as a payroll expense as one line item. Payroll cost needs to be allocated to all the jobs so we are not overestimating the profitability of the jobs. It is also important because WIP schedule captures the cost of materials, subcontractors, payroll. So the cost of the whole project needs to be allocated properly so we know if it's overbilled or underbilled. Now let's briefly get out of the spreadsheet of this presentation and show you what a WIP schedule looks like. You will be asked to provide with a WIP schedule sooner or later by your surety companies. Either they give you their own package, which could be a PDF if you are applying for the small ones, SBA. If you are a big contractor, they will provide you with their own WIP schedule where you need to fill out their data. Most of the softwares, if you are going for bigger ones, they have inbuilt WIP schedule, but QuickBooks Online does not have. QuickBooks Desktop, except Premiere, does not have those inbuilt inside the software. So you have to take out the information from QuickBooks and enter it in such a way so we can create the schedule outside in Excel and enter the adjustments into QuickBooks, and these adjustments should be tied out to the schedule. So as you are becoming, if you are becoming a bigger contractor and getting bigger jobs, you would see that you would be asked to provide this with this Excel. So it provides you with information: what is the contract price, the estimated amount, then there's a gross profit represented as a percentage, current year cost, previous year cost from your QuickBooks file, also the billings from your QuickBooks file. Based on that, we do percentage of completion, and then revenue is recognized to give you overbilling, underbilling. Overbilling and underbilling is something crucial which these underwriters really look for to see how you're performing on your jobs. If you are profitable on your jobs, what's the backlog? So it gives you not only a overview of all the jobs, it's an overview of all the jobs in one place. So you can see what's the cash flow, how you're doing on your jobs, what's expected for the coming months. So it's not only a compliance report which goes in for the surety bonding purposes to those agents, but it also gives you a very clear idea of, as a month end report, to see where you stand on each job, what you can expect for the money to come in for future months, if that's enough to cover your overhead. So once you start putting things right in your QuickBooks, this report is very important for analytical purposes, for your job overview, all in one sheet to see what's going on in your job on a month to month basis. So I highly recommend implementing WIP in your bookkeeping as a month end process. Now going back to our presentation. The ratios which helps you get more bonding or increase your bonding capacity is current ratio, working capital, and debt to equity. Current ratio is your current assets by current liabilities. The higher it is, you get more bonding, or your bonding capacity increases, because it shows you have more assets, which is money coming in, which is accounts receivable, bank balance, fixed assets. These are all your current assets. So the higher it is with respect to your liabilities, current liabilities, it looks good on your books, it looks profitable on your books. Working capital is the cash flow. Again, the higher this number is, it shows that you have cash enough to fund the project, and you have cash in your hand to sustain for the couple of months. So even if you're not doing good in a particular project, you have enough capitals to sustain. Debt to equity is the amount of debt you have to the equity, is how much you're vested in your business. If you are pulling out a lot of money from your business, it will be negative, which does not look good, because you need to be invested in your business from surety standpoint. So having these numbers or analyzing them on a month to month basis gives you an overview where you would stand in the eyes of surety bond purposes, and if you can increase bond capacity based on these numbers, because these are the three key ratios that surety companies really look forward to. Now, the most important thing is growing a profitable company. The prior things which I just spoke about was all compliance, which needs to be done. If you're applying for public jobs, surety companies give you the bonds based on the performance, based on how you're doing. But unless you're profitable, it's very hard to run a company and be sustainable for a long time. So having your accounting set properly so you get meaningful information out of it is very important. Knowing your margins to make sure how much you're charging on your jobs. Is it enough to cover your overhead? Contractors like to take on a lot of jobs because they think it's only money, 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 and how much sales you are doing. But not all jobs makes profit, makes a certain amount of profit which could be allocated so that it can be covering the overhead costs for your company. A lot of jobs requires you to pay upfront out of your pockets, so you have to analyze if the jobs are really profitable, will make you profits, or will it be more of creating cash flow crunch for you in the future months. So analyzing the jobs as it comes through to you before you take up the job is very important. Having the correct margin, analyzing it quarterly to see how it should be adjusted for future months is also important. As a business owner, so you need to focus on how each job performance is going as the job is on an ongoing basis to see where you can make money, cut costs, or what's going on while the things are in progress, rather than waiting for the project to be over and when it's too late. You can see the backlog from WIP schedule as I just showed you in the prior slides. It gives you information on what's the backlog and what you'll be collecting as a cash flow in your future months and where would you stand. Also, how soon would you be breaking even for this year? When will you be reaching your profit goals for the year? Whether or not you have enough capacity to increase your bonding capacity for the next job, or if you need a line of credit for the next jobs coming up, having a cash flow analysis. So these are the important things which a company owner needs to do on a monthly or a quarterly basis to run a company successfully, profitably, and having building a business which is sustainable. We at Surety CFO work with commercial contractors exclusively and help them get financials ready for bonding and their reviewed financials, compiled financials. We also do one-on-one monthly coaching to go over their financials and walk them through to make them realize what is going to happen if they take a certain job which they think is going to bring in a lot of money, if it's really going to be profitable on a month to month basis, or if there is backlog, how would it impact the company. So analyzing things before it happens gives you a clear overview of what's coming in the coming months, because construction industry there is always a timing difference of money coming in and money flowing out. It's not always at the same time, so that creates a cash problem for all the time. It's always there. It's just the nature of the business. You can't help it. So it's much more stressful. But if you know these numbers well, you know what's happening in the coming months. You can foresee things, which becomes makes your life easier and less stressful. Again, as I indicated, if you are going for public jobs, you would be needing reviewed financials, compiled financials. Even your interims need to be right in order to provide it to the surety company as the jobs come up. You're bidding for the jobs, they will ask you for recent updated financials, profit and loss, balance sheet, accounts payable, and accounts receivable report along with WIP schedule. So you need to have a monthly accounting process in place so you can give them the information as you are bidding for jobs. You have them handy. You need to work with the CPA to get the financials which are reviewed or compiled and has to be industry specific. So just going to a tax preparer and asking them to provide you with these, they will not be able to help you. At Surety CFO, we are bookkeepers and we are CPAs who work exclusively for construction business owners. So if you need help, book a call and see how we can help you in your specific situation. I hope you found this video helpful and covering some points which the underwriters and surety companies look for. So hope to talk to you soon and we'll see if we can help you or you need anything which we can guide you through. It will be great. Talk to you soon. Bye.